get started today. And thanks everybody for coming in. Again, my name is Dale Fickett. I work as the Executive Director at Advantech, the city's small business incubator, and I'm also a broker of commercial insurance specializing in new businesses. And what I wanted to do, just to get the session kind of kicked off here and building on what we were talking about last week, was just to see if people could give me an idea of some of the risks that they see as real important in terms of their business. And we'll get some of them written down here.
Accident falls.
Okay. So that's an on-the-job injury? Okay. Okay. Kevin?
Employing good staff.
So the risk is bad
Not
staff?
bad, yeah, bad staff. You know what I'm saying?
Is that okay? Poor staff performance?
Yeah.
Okay. Ulysses?
Equipment failure, my equipment breaks down.
Equipment breakdown?
Right.
Okay.
Or stolen. Yeah, equipment loss, yeah.
Okay. Fraud? Fraud, an employee or?
Customers, both.
Okay.
Customer and employee.
Okay. Yes, sir.
Errors and omissions.
Okay. Errors and omissions? That sounds like a technical term.
Yeah. Performing due diligence.
Okay.
Right.
All right. So it's performing a service and making a mistake when you're doing that.
Exactly. Yeah.
All right.
Mismanaging of finances is another risk.
Okay.
Improper finance or improper spending.
So that's running out of cash or
not
being able to make a payment.
Well, not putting the money, when you make the money, not putting the money in the right areas of the business.
Okay. All
Stuff
right.
like that.
Yeah. So that's a little bit different. So there's running out of cash, and then there's the investment side of what am I spending that money on?
Yeah.
Right. Okay. All right. Any other ideas?
Yes, does the on-the-job injury include customers injury, clientele injury?
I don't think that's what we were talking about the first time. So let's put that down. So that was somebody coming on site and getting injured, right? So client injury. Okay. Okay.
To me, it's a risk of even doing the business in the first place, or really just being in business.
Right. So the greatest risk we'll face as a small business owner is going out of business because we're
Right.
irrelevant in the market,
Right. Yeah.
So is it okay if I call that market irrelevance?
I think that's it.
Okay.
Or business owner giving up, because that's what I call it. Doesn't matter, how, where your business goes, you give up, you go out.
Well, a lot of times we talk in terms of, do I need to pivot in my business, right? So market irrelevance, so if I know that I'm irrelevant in the market, it's time to pivot.
Right.
But what you're talking about is abandonment, right? I'm done.
You probably, yeah, more than likely, yeah.
Yeah, all right. Owner gives up.
Pretty much.
That's a risk.
It's not a risk. I think it's more you putting yourself down. You built something so much of your life invested in it and you give up, you taking a chance.
It's a risk for
So
your
it's a
employees.
risk giving up. You actually want to put your thoughts back into it to find out what make it do better. Like you said,
yeah.
pivot.
Oh,
You
yeah.
pivot another way. Like if you can't sell water, try sodas.
Okay.
People might buy sodas.
So the gentleman in the back made a point, which I think is great, right? It's a risk to your employees if you just say, I'm closing up,
Right.
right?
Right.
Right? Sir, did you have another point?
I did, but it might fall under make a mistake, and that's I believe it covers under make a mistake. That's a damage to client property. And
Okay.
That would probably fall under that.
Okay,
Make a
yeah, so
mistake.
that's actually, I should actually put on here as well, products, right? Because if I'm making or selling something that fails, that's another risk, right? Okay, and, yes,
I was gonna say, external services to you, to the business.
okay,
I'm thinking like phone services, utilities and all.
right, so there's a risk that that service is interrupted,
Just a guess.
okay, all right? So I put that down as service or supplier interruption. Okay, so, by the way, there's hundreds of risks to businesses. I was talking with the head of risk management, I think I mentioned her last week, she oversees all of the risk and the mitigation of that risk for the development of the new buildings at the World Trade Center. And so they have several hundred risks, right? So what I wanted to do was just kind of run through, before we go into the slides, I just wanted to run through a few of the types of risks, so the categories that I like to think about when I'm trying to identify the risks. And then we're going to go through some of the slides which are split between internal and external risks, and then we'll talk about some tools for how to manage that. So the first type of risk is a pure risk. So this is, I suppose, the sort of event or occurrence that could just happen. So for example, a fire could strike, a war could break out. It's essentially, it includes things, we would refer to them as exogenous perils. So it's an event that can just happen and it's out of the blue. The next is strategic risk. And so this has to do with the business that I'm in and identifying the different areas in which I can make changes to my business strategy to respond to what's going on in the market. So strategic risks are things like a selection of a location for a store is one example. Strategic risk could be something around who are my supply chain partners, who are the vendors that I'm relying on. Strategic risks have to do with, who are the customers that I'm trying to attract to my business. And so there are ways in which we can respond to strategic risks, and that mainly comes back to business planning. The other type of risk is operational risk. So this is sort of the level down. So we're not talking about strategy in terms of who am I, or what am I selling and to whom, and how is it different than my competitors. Now I'm talking about operationally. So on a day-to-day basis, this is the work that we do, this is what happens in the store or in my business, in my garage. These are the things that happen, these are the procedures that we have in place. And so an operational risk is that something goes wrong. There's a breakdown, like an equipment breakdown. Something in that process, something in the way that we're organized goes wrong. And then the last is financial risk. So, the mismanagement of finances, right? And so that can be either in terms of running out of cash, so managing what that cash looks like coming in and going out on a month-by-month basis, but it also means in terms of how am I making my investments? So when I look at, the capital side of the budget, and I'm saying, okay, I'm going to go and buy that piece of land in order to start this business, or I'm going to buy that building, that's more on the capital side. And then we have the operating side, and so those risks are more about, cash, liquidity. How am I doing to make sure that I have the right funds when I need it to pay my bills, right? So the other thing that I was just gonna, just to sort of set the stage for this, is to talk about this dynamic. And so, so I just sketched this up real quick, but basically, at the highest level, the way to think about risk, at least, the way that I think about it, is that every business has a particular strategy, and that really comes down to three things. What am I selling, to whom, and how is it different than my competition? And so the answer to those questions drives my operations. That will determine all of the things in terms of how I organize the people in my business, the sort of processes of who's doing what, and any of the technology that I need in my business. That's really the link there, which drives the operations. And those operations, the way that those operations run is what results in risk. That's just the nature of business. So if I'm in business, I need to understand the fact that because I'm in business, there will be risk. And so the way in which we manage that risk and the degree to which we capture that risk and manage it is directly related to how we can make better strategic decisions. So the more that I understand the risk, the more that I'm able to mitigate that risk, the better off I am in terms of making those strategic decisions, and the better off I'm able to know when it's time to pivot, right? Any questions on all that so far?
I'm not sure if it's strategic risk or not, but for example, the sequestration has come in, and if you have a business that's based off of certain funding streams and all, is that more, I mean, I don't know, is that operationally or strategic? Because you've based, I mean, a part of your business operations relies on this, this, the way the government operates, per se.
Right.
I don't know if I need to look at that as, is that the way, is that a strategic type risk that I'm looking at?
Yes, so I would definitely put that in the category of a strategic risk. So there are geopolitical factors,
Right.
There's sociocultural factors that will impact the business, there's demographic factors. So these are the really big things that are happening in the world. In technology, there's different trends,
Right, yeah.
Big data, different,
right.
different delivery models, cloud-based computing, and so forth. So those sorts of macro changes mean that I might need to change my business. And so that's the sort of strategic risk, which says when I'm over here looking at this, I'm identifying the risk. Now I can see how it impacts my strategy, because when I'm saying, who am I selling to, maybe the government isn't the best customer anymore.
Right.
Do you know what I mean? So if I say, well, actually, the customer that I now prefer is this particular segment or part of the, general private sector, right?
Okay.
Any other questions right now? Okay, so I'll get started with some of the slides here. So as I said, we're in general, we're going to go through the internal and external risks, and then we're going to talk about some tools of how to manage risk. And just like last week, when different things come up, please feel free to stop me, throw your hand up, or just shout out. It's fine. We'll just be conscious of everybody else, though. We won't talk over one another. So quickly, the objectives are to identify common risks, identify internal and external factors which affect risks for us, and then to identify situations which may cause risk. Identify common warning signs, implement, monitor, and evaluate risk. So, to me, it really boils down to, can I identify the risks to my business? Am I able then to look at those risks and understand how to react to them and how to mitigate those risks? And can I then actually go and do that, right? Can I put things in place which help me to better address the risks to my business? Okay. What do you know or want to learn about risk management? We already started out by putting down some of the risk topics, but if there's just sort of any thoughts about something that they want to make sure they cover today on risk management, let me know. Anyone? Okay. So, essentially, risk management is about identifying the threats to a business, the impacts of those threats, and then making sure that we're best positioned to grow the business over time. Okay, so I love the fact that they put this right up front in the presentation, because this is a really important point, because positive situations, we tend to think of risk as a negative thing, but there's actually very good things that can happen with our business which could result in a risk. So anybody have an idea on a good situation which could result in a risk?
Yeah, I've got one right now. Business success puts you so that your resources and all get strained, and it could hurt your reputation if you grow too fast and you're not able to deal with all the business. Suddenly you find yourself in a situation where you're unable to live up to that expectation that was when you were smaller, and so your reputation could get hurt from that.
Right, so
Right.
growing too fast.
Right.
Right, yep, so all of a sudden, you have the face to the market, everybody knows, this is the sort of business that I have, and you've been putting out this sort of presentation about yourself and the way that you want to be viewed, and then all of a sudden, we start growing and we don't have the staff or the capabilities behind us.
Right.
We don't have the right structures in place to handle that level of demand, right? Yes, sir.
Start biting off more than you can chew, in other words.
Right, yeah. So, all of a sudden people are saying, well, you said that you could do this for us, let's go.
Yeah.
Aren't you ready?
Right.
So, anything else? Okay. I'm just going to jump right into some of the risks just to move on through. So, there are some, I suppose I would classify these as sort of pure risks, right? The owner gets knocked down, gets hit by a bus, hospitalized, or you have an illness from a key employee. These are the sort of things that, as I said, I would classify that as a pure risk. There's very little that we can do to mitigate that. So theft and fraud, we already talked about in terms of some of the sorts of risks we can have to our business. And so there's some very good examples here about how somebody can pad the expense account, they can be manipulating the time cards or the time sheets. There can be theft of product that requires security measures, or there's the fraud situation or embezzlement where someone's within the finance function is, messing around with the numbers a little bit. And so we see that a lot of the factors that contribute to that are low morale, dissatisfaction, but also financial difficulty. So if I have a chief financial officer that is under severe personal financial pressure, then there's a strong motivation for him or for her, on the other side to be, to be engaging in this sort of activity. And so that's not to say that that would definitely happen, but it's to say that it increases the risk that it would happen. Also, there's that there can be sabotage of systems and an operational sort of issue, talking about service interruption. If I have a disgruntled chief technology officer or somebody who's running my IT, if they get disgruntled, they can cause a lot of damage, especially with the reputational risk of what that could do if there was something put out there on the company's website. So on the equipment and information technology, again, the equipment breakdowns. So there's some risk, not just about malicious behavior, but also about some older equipment, older technology systems are more likely to be, to fail. And also that's true of any equipment, right? So not just vehicles, but also, depending on the sort of business, other sorts of equipment that we might have. So on the IT side, and this isn't really a discussion about information technology risk, because we could do whole courses on IT risk, but this is just to kind of give a few points here about having a backup of data is always a good idea. I know myself, I have to travel from time to time, so I just always want to make sure that I have a backup of everything on my hard drive, on my laptop before I hit the road. You never know when somebody's going to break into a vehicle, or especially in the airport, I'm always kind of conscious that somebody could grab the bag. Power and connectivity, there can be different issues there with surge protection and that sort of thing. And lack of administrative controls. So this is just basically making sure that the people in your business have access to what they should have access to, that they're able to see the information they need to see, that they're able to edit the information that they need to edit for their job, but that they don't have access to everything and anything, because that increases risk. Other internal risks, so internal within the business, in terms of physical plant. So if I have a physical location, whether that's simply just an office or whether that's a large manufacturing facility, there are certain things that I need to do to make sure that that site is running properly, right? So this isn't news to anyone, but it's just basically making sure that the maintenance is in order, and the better maintained the facility is, the less likely that there will be different claims of injury and those sorts of problems. Incidents that can come up, work-related injuries. We also talked about problems with some customers or clients coming on site. And there's a lot of different procedures which come into play with this. Anybody who's worked in the restaurant industry before, I worked in retail for many, many years, and when you mop the floor, you have to have the wet floor signs up. It's those sorts of procedures that are important to to make sure that we have, and that there aren't exceptions to it. It's just a part of the normal running and functioning of the business. Okay, so other internal risks, and we were talking about this in terms of mismanagement of finances, unexpected costs that can just come up out of the blue. That's why it's always good to have a cash reserve or cash contingency. Loss of credit lines, so a lender says, well, I know that we extended this line of credit, but unfortunately we're not able to do that anymore, and then they cut that line of credit, or they call a loan. The other is the expenses related to establish new lines of credit. So if there are those kind of issues, then we could have a problem in terms of the added time and cost associated with getting new lines of credit. Now, the other thing that I'll just add on that is on the financial risk. There's other sort of issues which can come into play, and so, for example, if I'm a business where I need to get some of my supplies from overseas. I work with a few clients that have some of their material in the textile industry, different cloth and so forth from overseas. They have to be very careful to watch the financial exchange or the currency exchange, because those fluctuations can make a big difference in terms of the bottom line on their business. So that's just another example of the sort of financial risk to a business. Okay. So just a question here about other internal risks to the business, and so just kind of going through that. Anybody have any ideas in terms of what internal risks, maybe we didn't cover them yet, but that you've seen in your own business that you thought, boy, that could really be an issue for me if that were to happen?
Manpower.
Manpower, just having the workforce.
Yeah, as far as employees to cover.
Right. So I'm going to say staff. So that's like an availability thing, I guess.
Poor staff performance.
Yeah, no,
Poor
as far as
staff,
staff,
period.
period.
Okay.
I've seen a lot of business, lines back up, you got 1 or 2 cashiers, and nobody else to, help out.
Right.
So that's kind of like a damper.
So like understand.
So that's staffing levels.
Yeah.
Right. So we have a peak time in the business. We're super busy and we just don't have the right number of people
Staff,
there
yeah.
to handle it. Right. So we've all had that experience in a store, right?
Yeah. That's a main issue.
Yes, ma'am.
Yeah, I would like to share. At the onset of my business starting, I did have a key person who was in charge of, had different passcodes and things of that nature, and that person became very disgruntled and went in and kind of really messed up a lot of stuff. And I'm glad that she didn't have access to the real stuff. It was just to some basic stuff. And so that was a risk for us. And I'm glad it happened early on at the onset, because, we were early to see early on, how this person really operated, so.
Right. And so when you said keys, that was keys to physical.
No, passcodes.
Oh,
like
into the
different-
IT systems.
Right, exactly, right.
Right.
But she was administrative. She was administrative support.
Okay.
And so she became very disgruntled and then went back in and just kind of messed up a lot of different things.
Okay.
So,
Okay. All right. Very good. Well, it's not good that happened.
Well,
but
I'm
but
glad
I mean
it
that's a
happened
good
early on.
yeah that's a good example of that
Yeah.
sort of risk, right?
Yeah.
So just out of curiosity, were there changes you had to make in your business as a result?
Definitely. And what I learned was that when you bring people in, you can't, sometimes you bring them in and, you want to try to establish a really good working relationship, and you kind of take people for what they say. So I just learned that you just have to ride people out for a little bit until you can find out that you can trust them. Because I guess the real issue is that when they get mad at you, that's when the real them come out. Because you can work with people and you can agree to disagree. But when you get upset and you go back in and you want to destroy mechanisms and things like that, then that's just not good. So.
Yeah. So one of the things that I learned kind of over time was that what I really needed to do was to show, I guess, trust on a step-by-step basis.
Yeah.
So I can trust you to a certain extent,
Right.
and then I'll see if you deserve that trust, and then I can trust you a little bit more, and then I'll see if you deserve that trust, and kind of keep moving along. Because if I just sort of decide, oh, I like this person, I'm just going to trust them with everything, that's when I open myself up to some real problems, right?
Exactly. Yeah, right. So I learned, so.
Yeah. Okay. So we're just going to go into some of the external risks. So competition and market risks. So we were talking about some of this in terms of strategic risk, right? So these are risks where I can change my business in order to address some of this, right? So loss of clients or customers, boy, that's a major risk to a small business. And a lot of times if there's bad press for example, can affect that. Or if an employee that I have that I thought was doing a great job, and all of a sudden I start hearing back from different people, I went in and I had a bad experience with your company because this person did this or said this or what have you, that's the sort of thing, that sort of reputational risk. The other is loss of employees. So sometimes that really has nothing to do with the business itself. It's just a function of the environment. So I'll tell you one of the examples that I had for a while. I told you that I was managing retail stores. And so I always knew come the end of the season, because it was a seasonal business, come the end of the season, everybody was going to start sort of just walking away saying, oh, it's okay, I don't need to work the last week, it's okay. And then I have this sort of staffing problem because I haven't properly prepared for the end of the season. And so we used to do different things like having an end of season bonus. If you stay through the very end, then we'll make sure that you have an incentive, basically an incentive to stay until the date you said you would. And so that's just an example of loss of employees. But certainly, if there's things that I'm doing as a manager of employees, if I'm out there with poor behavior towards my employees, that's definitely going to affect us, right? And I think pretty much everybody I speak with can talk about an example of a time where they had a really poor manager that that was just really bad at handling different types of conflict in the workplace. So decrease in sales, prices fluctuating. So we were talking about that in terms of currency, but that can be true just in terms of markets, right? So if I'm in the food business, boy, food prices really fluctuate. We see that all the time at the gasoline pump, right? So the prices just go up and down. So that's an example of a market risk there. The other is increases in vendors' costs. Pretty much in any sort of long-term budget, we would look to mitigate that by making sure we have that built in. We know that there's an inflation rate, and then we usually put something on top of that so that we could recognize, that probably we're going to have to pay more for the raw materials or for the inputs or products or for salaries in our business. And then, I've already mentioned oil and gas, and then fixed cost changes, sometimes those can affect us too, right? So, the example here is rent. There's others, if there's a large contract that I'm relying on someone to provide a service for me, that I may recognize as a fixed cost depending on how that's structured. Business environment risks, so we were talking about some of these before. Laws can change, the fiscal policy or the sequestration, those sorts of things can change. So just an example on laws, when I was working overseas for a few years, I worked with banks to look at the laws that were changing and what that meant for their business, how their customers were going to respond, and what they could do in order to change their business in order to make some more money, basically, is what that boiled down to. The weather can affect different businesses in different ways. If I have an event-based business where I'm hosting something which is outside, boy, I'm really going to be affected by the weather. Of course, the agricultural type businesses, weather is a major factor. In the insurance business, depending on the types of businesses or the types of homes, weather can be a major factor too in terms of claims, especially in coastal areas come to mind. That's just one example, right? Natural disasters, and then so here in terms of community as being a business environment risk, anybody have any ideas on how community would be a factor in risk?
They can put something bad out on your business and cause people in the community to not shop with you.
Right.
Which could be a risk.
Right. So there's somebody who says, boy, I really don't like Kevin, so I'm going to go out there and do everything I can to hurt his business. And so that person's getting everybody all sort of riled up and saying, yeah, we're not going over there.
But your business got to capitalize in a position, so keep capitalizing.
What do you mean by capitalize?
You know, always having an avenue out. Your business always got to have an avenue out. If it doesn't, then it's never going to be successful. So, you know, you always got to plan for your future, no matter, even if they don't think you plan, you continue to plan and continue to plan and continue to plan. Always have new customers.
Okay, okay.
So you see what I'm saying?
So you're talking about the customers that are coming to the business.
Yeah, or just in business in general. You see what I'm saying? So you
Okay.
still got to always have, you got to use all your tools. Is
You're
what I'm
talking
saying.
about the plan B.
Always plan B and C and D and E, F, all the alphabet.
Okay, okay, I'm with you.
And then
Okay.
start it all over again.
I wanted to make sure I was following the
Yeah.
point there. Okay, all right. So, yes, ma'am.
Would it be an instance where maybe this was a booming community, and all of a sudden the community starts going into transition, and you have a lot of crime and different things like that? So would this be the type of business environment risk that you would kind of couple this with?
I think that's a great example, right? So in the community, for example, if most people were relying on one particular business for their jobs, and then all of a sudden that business is gone, and now there's a lot of new problems in the community because now a lot of people are unemployed, there's higher instances of crime, people are struggling with new issues. I think that's a good example, yeah.
Well, could it also be the reverse? You know, I just take for instance Churchill. Some years ago, Churchill was not a really good area to live in. Now that community is booming. I mean, people are coming back in droves. Homes are being redone.
Business coming up and everything.
Businesses are coming up there, and so I guess it probably can just also be the opposite as well.
Right, yeah, I would agree, right? So if I have a business which is based on being within an environment where things aren't that good, right? Then as the environment improves, my business could become less and less relevant, right? So, for example, if I have a check cashing business, right? And so people come over, they cash their checks, they get paid, they need, they need that service. But if all of a sudden a community bank moves in now, and they're offering that service for a lower price, and everybody realizes, well, you don't have to pay that fee to cash your check over there because you can go to that bank and they'll get you set up with an account, no problem. Then, all of a sudden, if I'm in that check cashing business, I better be ready to have a plan B.
Or
It's almost
stay
like a
open
mom and
later.
pop thing with Walmart moving in. It's the same
Right,
thing,
yep, that's the same sort of thing, right? Absolutely. So if I have a corner hardware store and all of a sudden Lowe's comes in 2 blocks away, there's a major problem.
Yeah.
Okay. So we're going to take a look at this discussion question then. So the situation is that you own a steakhouse, there's a tainted meat scare, and maybe we found this out through our supplier. How would we manage this risk?
You get rid of all the meat at a low price. Start selling no.
So,
Get rid of all the meat at a low price.
okay, door number one. Sell the meat out of the back door.
It didn't come from me.
Half off
I'm serious.
You would change your menu. Change your menu, instead of steak, serve chicken.
Okay, so for a period of time, you
Yeah.
say, you know what, we're not selling steak.
Or you inform the community about
No.
the scare, find out exactly what farm the tainted meat is coming from, have another vendor set up. You go to that vendor, you change your vendors.
Okay, okay.
That's
what
I think that
I would do a whole public relations thing. I would get the Department of Health in there, let them certify that this place, that our food is certified and that we've revamped everything. We've scrubbed like they do on cruise ships. We've scrubbed everything head to
Well,
toe.
maybe not cruise ship.
You know, you just do a whole public relations thing where you can let the public know, look, we're safe now. This did happen, you know, and I think the thing for us with consumers, you have to be truthful. Don't lie. All right, if you had some of that meat, all right, say you had some, it's gone. We're doing this now. This is what we're doing. We got the Department of Health in here. They certified that we're okay now. Boom, you're back in business.
Right. So, and both of what you're saying, I think, you know, we would agree with, right? So, go ahead.
Yeah, so really it's a two-pronged approach. I think everybody's saying the same thing. It's managing the risk, you know, and then controlling the impact, the perception
Right.
that's happening to your business and all.
Right.
It's just kind of, you got to deal with them both.
Right.
Yeah.
So I would agree, right? So the number one thing I would do is contain,
Right.
right? So what is the extent of the risk? Because I, in fact, may have no tainted meat
Right.
whatsoever. So the first thing I need to do is get in touch with my supplier, right? And understand what batch numbers are we talking about? You know, do you even know? And then I know, is this a situation where all the meat that I have has to go? And then I need to do the public relations to let everybody know, by the way, in my restaurant, I don't know what everybody else is doing, but in my restaurant, this was our response. And then so there's that containment, there's the notification, and then I have this issue with my menu, which we were just talking about, which is, okay, well, if now all of a sudden I can't sell steak, then I need to make sure that part of my notification is that people know that, and I also know, here's when we're back to normal. You know, here's when everything will be rolling along just fine. Just give us 3 days. We have another supplier bringing in some meat that we know is fine.
So really you're saying have a backup menu. Take all the old menus up, put a new one on there, they ain't got steaks on there.
No, so if it were me, and I'm just thinking, I didn't work in the restaurant industry, but I'm just imagining that, you know, I go into a restaurant, they have all the menus printed up, right? The menus are there. And so I would just make sure that my servers knew when somebody sits down that we tell them, you know, by the way, we don't have any beef right now, all the beef dishes aren't available, just over the last few days. I don't know if you heard about this or not, but there's a scare. You know, this event happened, so just so you know, we don't have that today. Yeah, exactly.
So there's this meat scare, what is it called, where it affects your brain, they have it over in England. Mad cow disease. I'm expecting that if that news release goes out, I'm gonna lose all my customers. I'm not going anywhere, regardless if you say it's not in your restaurant or not. So shouldn't you shift your business around a little bit more and really try to,
Vegetarian dishes.
or something, yeah.
Well,
Because, I mean, you might,
so the specials definitely won't have beef in them, right?
Yeah.
Right, I mean, so that much we know is for sure.
I guess
And-
my question is, it's not just a special, I mean, you need to let people know that, you know, it's a major concern that we're not even dealing with meat at this time so much. I mean, don't you need to really change the perception of folks and really try to, because that's going to hurt your bottom line if people stop coming because mad cow disease.
I mean, what's the difference if it's mad cow disease or what's the other one with the stomach thing? I mean, both are gonna get you sick. I mean, what's the difference? If it's mad cow disease or like E. coli, what's the difference?
To me, that raises a point. When do you start to make that change? When do you panic, so to speak?
Right.
The
Right.
demand might go down, and your shop might go down 2%.
Right,
Well, you can capture that relatively quickly by
Right.
doing whatever you're going to do.
right.
Should you panic as soon as you see that hit the newspaper and start this large ad campaign and we don't have it here, or do you wait and see what type of demand change it will have on your business?
Right, okay, so I would say that there are certain risks, and we're gonna come to this in a little bit, so there are certain risks that are more severe than others, right? So if it's the sort of risk where it's going to be a temporary thing, I talked with my supplier, they said, listen, don't worry, we're gonna be back to normal, we have new beef that's coming in, that's, you know, don't worry, it'll be fine. And if I know that the seafood isn't a problem, I know that the poultry isn't a problem, we can get chickens, you know, we can get turkey and so forth, then you know, then, or pork, and if I'm able to do that, then I know how severe the issue is. And part of that is, what's the impact now, how bad is it now, and how long is it going to be a factor? If this is going to be an interruption of beef for a long time, then maybe, you know, I really need to look at, okay, is it a good thing to be in the steak business in the first place? But to me, that sort of seems as though, at least what I've seen, is that most issues like this are a temporary thing. It's not a long-term, I need to change the whole strategy of my business.
I got an idea. If you're serving beef, you could just tell them, like, listen, we're not serving raw beef, we're going to serve it well done, or something like that. You see what I'm saying? Because a lot of times, I mean, you know, I done been to some really expensive restaurants.
You just still,
You know, orders. I'm gonna give it to you real, you know. I mean, what you want me to do? I'm gonna tell you real. I'm gonna let you know, like, look, you know, the steak is good, but you know, you gotta get it. Man, let's just put this thing down here. You shine this way, but you eat your steak. But I mean, you can kill it all by cooking it well.
So you don't like you don't like steak rare?
I don't eat beef, period. So, you know, I don't do beef. You know, I'm a limited meat guy.
Okay.
So, you know what I'm saying? 5 more years I'd be vegetarian. I'm not moving on.
All right.
You see what I'm saying?
Yes, sir.
Isn't the most important part is the paperwork to cover yourself, because if you don't really know whether you've already sold some of this or not. Isn't it important to let you know, to cover yourself, so if you have, you can say, oh, okay, we started researching this when or now, you know, because you don't even know if you've already served some of that dead meat.
Well, that's true. So, and so I know in the health, in the food industry, they have HACCP procedures. So there's, you know, so that comes down to those critical control points where they, you know, where there's a whole traceability, right? So when I go and I'm putting this steak on the grill, you know, whether it's rare or well done, I know where it came from, I know when we got it, we have the batch number, the lot number, and we can track that all the way back. And so that's why when there are issues like this, that a supplier or a distributor can tell a restaurant or a grocery store chain, this is what's happening with the shipment that we sent you, here are the dates that we're concerned about, you know, this is the food to dispose of.
So you don't lose a lot.
And shouldn't you also have like a disaster recovery plan in place for this situation, rather than, you know, wait for it to occur?
Oh, yeah.
Something in place that this is what we're going to do just in case.
That's right.
Yep, absolutely.
The steakhouse, you've already thought of it.
Right.
Yeah, so the other point that I want to come to, and I'm going to pick up on that in a little bit, about, you know, how do we manage the risk, right? So, and that really comes down to identifying that I need to put the plan in place of what happens if that risk comes about. And it depends on the type of risk that we have, how we mitigate, and then actually putting that into effect. Okay, so personal conflict risks. So, you know, we've all had those sort of situations in small businesses where family situations come up which can impact our business. And sometimes that just has to do with relationships. That's not an illness or a death, but all of a sudden there's a conflict within a family that can...
Hiring family.
Oh, yeah.
Hiring family.
Yeah, it depends if you're hiring family or if you have family involved in the business in any way, right? And so, actually, I'll tell you, I had when I was in business, I had one of the businesses. Let's see. So this is going back to about 2004. I had a close friend of mine. He and I were business partners, and his aunt wanted to work for us. And I remember I was sitting down and talking with her. She's a very nice woman. And I was explaining to her that bringing family into a business can be wonderful or it can be horrible. And I was explaining that there are certain family members, I know in my own family, and this was my business partner's family, I said, I know on the one hand, it can be wonderful if someone says, you know what, I'm going to come in, I'm going to give you everything I have for the time that I come here, don't worry, and I know I can trust them, and everything goes along, and they're happy to do things the way that I'm asking them to. On the other hand, you know, we can have family members who they want to call the shots and they think that I owe them something, and so it creates a whole different dynamic altogether, right? So I remember having that conversation with her. She ended up being a wonderful employee, but you know, but we had that conversation up front before we really started moving ahead with that. Okay, so a key question. What is required for a business to continue operations if we have a major risk? So let's go back to that steakhouse example. So we have a major risk.
Back up a little bit.
Okay.
That example that you gave about the friend and the aunt.
Okay.
Okay. Did you and your friend talk about that you would be the one to talk to the aunt versus him talking to the aunt? I mean, what was the strategy behind that? That's why I want to know the backstory.
So he and I spoke about it because we had a business plan we were working on together. We knew we were going to be opening up our store on such and such a date. We knew that we needed to get some people in that we were going to be able to trust right out of the gate, because they were going to be in there selling and running the cash register and all that sort of stuff. And so we spoke about it. He mentioned that his aunt might be interested in working, but he wasn't sure. And so we spoke a little bit about, you know, her and her background and that kind of thing. And then, you know, we just agreed that he would speak with her about the opportunity to see if she was interested. And if she was, then I would interview her. Yeah. So I mean, that was just the way that we sort of did it. I don't know if that's right or wrong, but that's just how we did it.
I could see why he wouldn't speak to her, because when she's talking to him, all kinds of things could be going through his mind when he was a little boy and all this stuff.
Yeah.
And she might not take him seriously.
Oh yeah.
You know, and he could only be so strong with her, maybe. So
yeah.
So I can see why you would do it.
Yeah, and that's so that's definitely true, right? Because, you know, I know myself, it's kind of like if my brother came to me for a job. I mean, I can't objectively interview him as I could for someone else. Yeah, it's a conflict of interest to a certain extent.
So you all handled the risk by you talking and interviewing her. That's how
Right.
you all handled it.
Yeah, so if we had to talk about the risk is there would be a poor hire, right? Where we just hired somebody and it was a poor decision.
So if she had to be terminated, you would probably be the one terminated.
Then I have to be the bad cop. Yeah, because I like being the good cop. Being the bad cop, some people like being the bad cop.
Well, he don't want to fire his aunt.
Yeah, he has to go to Thanksgiving dinner, right?
Right, exactly.
Okay, so let's come back to this question then. So I'm going to use the steakhouse as the example. What is required for the business to continue operations? So we had the scenario, we know what's happened. Let's say that the supplier says, oh, it's okay, you know, we have this covered. What we're going to do is we're going to send you over the batch number, all of the box numbers. You know, we understand all the pallets and cases that were involved. We're going to give you all that information and tell you the shipment dates. So let's say that we're expecting to get that information. What is required to continue operations?
Disclosure in that information. This lot of food came out on this date, on that date. We didn't have it on this date or that day. I mean, I guess it's just disclosure, having all of your insurances in place. I mean, because if somebody did, let's say you did serve it and you were unknowingly served it, you know, I mean, that's why you have liability insurance and all those things, because this is something that just happened.
Okay, so way before this even happened, I would have to have the insurance in place, right?
Yeah.
So if somebody calls me and says, hey, I need an insurance policy because this just happened, you know, we're not gonna be able to get them covered, right? So that has to be, so that's way, so I agree. So the insurance is way in the beginning, and you mentioned public relations.
Yeah.
Yep, okay.
And disclosure, I mean, as a customer, I wanna know the truth. You know, I wanna know, when I came to your restaurant on May 13th, did you have this meat in your restaurant? And I think if you are a reputable business, that you would be more than glad to disclose the information, because that's what keeps customers coming back, if you're gonna be truthful.
Right, and we're commenting about, yes, sir.
Yeah, and it goes back to what we were saying before, did you have a contingency plan in place?
Right.
I mean, you know you're in the business of serving the public state, and you know about mad cow disease, you're gonna have some kind of contingency plan in place.
Right, yeah,
Yeah.
absolutely.
Just to keep the doors open, what are we gonna serve until we get some better steak in the house?
Right, so what we're saying is to continue operations, we said that we have to give notification, public relations, we have to be able to do that. We also mentioned your point then about the contingency plan, to make sure that that's there in advance, and we need to make sure that the insurance was there in advance.
That's part of that plan.
Right.
You're gonna need to have some cash so you can go out and get the new stuff. You find out somebody has some good beef or whatever, you're gonna have to have some cash on hand to take that loss that you're gonna experience from having your stock depleted immediately to restock.
Right.
You're gonna have the cash on hand.
Right, yeah, because if I'm running that operating cycle and I know, okay, well, this is what I'm experiencing in terms of sales and dinners served, and then I look at, okay, well, it's a cash business, so I get money right away. I don't need to worry about collections. I'm getting money right away, and then I'm turning that around into new food coming in. Then all of a sudden, boom, my beef inventory is gone. Now I need, all of a sudden, I have to dip into cash somewhere in order to replace that when I know that there's good beef available.
Well, shouldn't all that stuff be tied in with your insurance? Because it would be a loss. I mean, if you already purchased this product and it caused a loss to your business, shouldn't all that be already tied into your insurance policy?
So it depends on the type of insurance that you have.
Right.
So just like we were talking about last week, so if I have property insurance with business interruption, depending on the way that policy is written, and it all depends on what's excluded.
Regardless of that, I've dealt with the insurance before. It's gonna take a week or two. I need to go in, I need that cash now because I want my business open tomorrow. I don't feel right.
Yeah, so, and that's the other thing too there, right, is that between that point of notifying the insurance company of a claim versus actually getting paid.
Right.
You know, I mean, it could take 30 or 60 days, you know, depending on the insurance company.
Right.
I mean,
Shouldn't your insurance cover that cost? Shouldn't it cover the cost of lost business? I mean,
If you have
that's written into your insurance policy.
Yeah, so if you have business interruption insurance, and if that type of claim or that type of risk is covered, because certain types of risks are excluded. So with this particular situation, it just depends on whether or not a foodborne, it would be a foodborne contagion, whether or not that's excluded or included in the policy.
I mean, but you said something last week in reference to, I mean, there's 1,001 insurance policies, and I'm sure there are insurance policies written for restaurants. And they are very much aware that these issues could happen in a restaurant. So it's not like you just go and get an insurance policy for car operations if you're running a restaurant. So most of those underwriters are aware of that there are different things that do happen when you run a food business. So, I mean, that's why I can't, see why all those things wouldn't be tied in. You wouldn't have to be worried about running around trying to get money to keep the business open for a few days or whatever, if all that is already tied in your contingency plan.
So there would be, regardless of the type, so the first issue is about the type of insurance policy and whether or not that particular risk is covered under that policy. Right? So that's one thing.
That's one thing.
And so as a good restaurant owner, I would want to see that risk and know that's a risk to my business. Is that covered in my insurance policy? The second thing is you were talking about that delay between when I've notified the carrier of the claim and the time that it takes to get reimbursed on the claim, if it's covered. And so I would say almost every time that there will be a delay in terms of getting payment from the carrier, because they need to investigate, they need to make sure they have their claims adjuster come out, understand what was going on, and during all that time, you have to, you know, you're in business, you want to be open that day, right?
I guess it just depends on what the incident is.
God forbid somebody got sick on that week.
Well, yeah, that's another different type of claim there, is if somebody gets sick and, you know, you have a food poisoning.
I mean, it just depends on what the incident was. Remember Chaco Bottom when we had the storm? Look at those businesses that were down there when the storm water went 12 feet and shut them down. I mean, so they were not able to open the next day. It did take some time, but I'm sure that their coverages probably, you know, covered all that the time that they lost the business. I'm just saying is that I can't see open up a business and something like that happens, and I have to run around and try to get money to keep the place operating. All that stuff should be tied into my contingency plan.
I think if it's tied into the contingency plan, you're still not gonna get the money within 30 minutes. You still gotta have a backup plan. You have to have petty cash somewhere to have a backup petty cash.
For what?
For you new meats or new anything to buy. If they say it's a drought right now in anything, what you gonna do? Wait for your insurance plans to hit to open your business up?
They're gonna go to your customer.
You're gonna lose your customers. Yeah. So you're gonna have to have a petty cash somewhere or a backup plan to bring something in that day for to carry you on until your check from the insurance company come, and that will replace your pocket. But you still gotta have petty cash to open your business up the same day. You can't. I mean, unless you got that to wait for 30 days, 60 days, 90 days, whenever they cut that check, to sit at home and wait, and your customers are gonna be like, okay, I'm waiting on her. I don't think no customer that loyal.
No, they're gonna go to your competitors.
I don't yeah, you have employees, and I don't think your employees or your people gonna wait 60 and 90 days to wait.
So why don't we do this? So let's talk about what would be in the contingency plan, because let's keep in mind, the contingency plan is a document or a page in a document which says, if we have this type of risk. But there could be a whole bunch of different types of risks. So let's talk about the contingency plan.
You can research companies, you know what I'm saying, to find out, you know, their rate on what kind of beef they sell.
So this is actually a good risk to run through on this, right? So the first thing is that we already know up front, we've identified this is a risk to the business, and I'm hoping to have insurance in place, right? So the first thing is the insurance. Okay, so that's one thing. And then we also talked about the supplier interruption. So I need to have identified a secondary supplier. The other thing is that I need to make sure that I have the right procedures in place to make sure that I can control my inventory. Because if I don't know what's coming in and what's going out, what am I, you know, what is the chef cooking? You know, the guys that are bringing in my shipment, when I'm unloading the trucks, do I know what I have or what I don't have? So I have to have that kind of control in place. The other thing that we talked about was public relations. So once it happens, then, and I'm just going to call that containment. So what do I need to dispose of? Right? And what are the steps that I need to take in order to start getting some new meat coming in, right? The other thing that it's going to have is some budget impact, right? So if I know that chances are, with the insurance policy I have in place, even if I have business interruption insurance, even if I'm covered by that sort of risk, and I'm talking with my insurance broker and I say, well, boy, you know, I'm really concerned about this particular type of risk to my business. Once I was able to actually file the claim, how long is it going to take for them to pay out? You know, what does that look like? And we don't know, but let's just say it's 60 days. You know, now I know what I'm working with in terms of my own budget to make sure that I can get myself through this. And then the other thing that we talked about was procedures in regards to what am I doing with my menu, what am I doing with the staff, the servers, and what they're telling customers. And then the other thing that we talked about is my PR, right? The public relations. What are my notifications to my customers so that they understand? So that's what would be in a contingency plan for this sort of risk. Any questions? Okay.
I've got one question. I know on the IT side, we typically run through a scenario like that. I don't know of any other businesses that they do that. Anybody in the food industry? You guys run through contingency planning like that? Like do a scare? Is that normal? Anybody know? Maybe not. Okay.
Does anybody in any of their businesses run through any sort of scenarios, disaster recovery type scenarios, or any sort of injury scenarios as a part of safety? Anybody do that?
We do. Yeah. Federal Reserve Bank.
Oh, okay. All right.
Right.
In my business, we have a safety plan for the youth that we work with. So if A happens, the staff know they need to call this person, and it's a whole list of procedures that they follow in order to kind of control whatever the risk may be or have probably might have started or whatever.
Okay.
Have you run through it before?
Well, we go through with the staff. We talk about it, who they need to call, what numbers they need to call first, who needs to be contacted, and what happens after there. So it's all with staff development, just to kind of keep them abreast of what they need to do. Now I need to ask a question with that contingency plan, with the insurance. Shouldn't you look at your insurances and see what would be covered? Is loss of business income going to be covered? Is foodborne illnesses going to be covered? I mean, I guess being it specific to your business.
Absolutely.
So those are the things that you need to talk to your underwriter about.
You would talk with your insurance broker.
Right, okay.
Yeah.
Okay.
And then he or she would talk with the insurance carrier underwriter.
Okay.
Can't you look at this too, like the quality when you first go into business? Because a lot of people try and go into business and say, well, I'm going to cut costs by buying a cheaper brand meat, when opposed to going out and researching for a more quality brand of meat and not going through those problems. You see what I'm saying? So like me with tools, I didn't go out, I got one tool that's like $200 and it's a little tool, but I could have went out and went to the store and bought a $25 tool that would have continued to break, causing me to have to think about all these things, whereas opposed to me just spending that $200 one time, lifetime warranty, anytime it breaks, I get it right back.
Right.
So maybe sometimes you should, it's like me going into business, a lot of people trying to find all the outs of how to save cash in the beginning of the business when they should say, look, if I get these tools now with the better quality of tools, like Ruth Chris, I never went to Ruth Chris and had a steak that was bad.
That's because it was tainted. No.
Well, I mean, I'm serious. Like when I go eat at these high level restaurants, and I go in and the quality of their food is different from, per se, her opening up a restaurant on 21st and Decatur. The quality of the food is going to be different, but when I look at the businesses that are open up in the area, they still, I go down to a business, I might spend $20 on lunch.
So there's two different things there. So the first is that it depends on do I have a business where I need to have high quality and higher prices?
Yes.
Or am I in a low-cost business? Because if, you know, for Walmart, for example, their whole business model is low cost. Low cost, low prices.
So that's where all the disease in the meat is.
No, I'm
Don't say
just for
that.
just for the record, I'm not saying.
I just agree with that because beef is beef. I don't, it doesn't matter what restaurant sells it. If it's tainted, it's tainted.
Right, that's right, that's right. So that's the thing, is that the risk, so I would think in this case, the risk is not correlated to the quality of the product. In this case.
Quality of the restaurant.
Or the quality of the restaurant, or what have you. Now the other the other point that you brought up though was about the risk, you know, in terms of the contingency plan and what we want to make sure is included in the contingency plan. So Kevin was talking about that example with tools and making the right investments so that I'm addressing an equipment loss or equipment breakdown. And I think that that's a great point, right? So in the beginning of my business, if I have the cash available, I can look at those options and say, well, it's actually better for me to invest in better quality or higher quality tools or equipment, so I'm mitigating the risk of breakdown. And I think that's true. Sir, did you have a point?
No, I was going to use the same analogy with insurance. The average business starting up, they might have a contingency plan, but they aren't going to load off a lot of money into insurance. You know, they might go in and get the basic stuff.
Right.
But, you know, to look at what the possibilities of somebody getting sick in the restaurant or later on down the road, I don't know if they're all, I'm talking about the upstart businesses now.
Right, right.
I don't know if they're going to really look into piling up the insurance policy.
Right, and so the contingency plan, like we're describing here, and that's a good point. It depends on the maturity of the business. And so with my clients, I talk with them about, you know, whether we're in the idea stage or we're in the, well, let's plan this business and let's start selling some things. If we're in that stage, then I should have a list of risks. And then if I'm further down the road, if I have maybe 3 or 4 restaurants, then it's really time to have the right sort of contingency plans in place. And some things I may just know, man, I really have to talk to my insurance broker about that. But if I were to talk with most restaurateurs that have one or, let's say one restaurant, I would doubt that a lot of them would have a full contingency plan for most of the risks that'll happen to their business, because it's not a mature enough business to have that sort of management capability underneath the operations. But I would also assume that, you know, if I were to go into TGI Fridays and talk with management, they probably do have all of that in place.
And they probably buy a better quality brand of food too, to serve as well. I'm just speaking on quality.
On quality.
Yeah.
But I think when you're talking about bigger restaurants like that, they don't all buy their same brand from the same place in case something like that does happen, because one restaurant can borrow from the other. Contingency plan, they're all under the same brand name.
So you're saying if there's multiple restaurants,
Right,
and there was an issue in one location, they could build into their contingency plan, moving inventory between locations, right?
correct.
Yep, I think that's absolutely true, regardless of the quality, right?
Well, I mean, quality is better.
No, I'm saying that regardless of the type of quality of what they're selling,
Yeah.
if I have multiple restaurants or multiple locations, I can start moving food from one location to another. Okay. We're going to start getting into a little bit about how to manage risks. And so the thing that I just wanted to talk about was the identification of risks. So we've been talking a lot in terms of identification and in terms of a contingency plan. So I just want to talk about this here. Let me Does anybody still need the contingency plan up? We're okay? All right. So, it's useful when thinking about risk to think about risk in terms of this diagram, because we need to think in terms of the frequency of a risk and the severity. So if it happens, how bad will it be? So if a risk is really likely to happen, and we know that it happens pretty frequently, and we know that the severity isn't that bad, so it's low frequency, low severity, chances are I'm willing to accept that risk. You know, it's okay. Look, if this happens to my business, it's not going to be the end of the world, and maybe the insurance premium for that is too high. Look, it's okay. I'll just accept the risk. If it happens, and I'll deal with it then. The insurance really comes into play for risks that are low frequency but are really severe if they happen. So we were talking about a whole bunch of risks that fall into this area. And so a fire to a building, a death of a key person in that business. You know, those are the kind of things that if it were to happen, it could be potentially devastating. You know, a claim by someone who says that there was an error, an omission, some sort of problem with the service or the product we delivered. The other part of this is low severity but high frequency. So anybody have any idea in terms of what sort of risks would be low severity? It's not that bad if it happens, and we know it's going to happen pretty frequently.
Injury on the job.
Job injuries
Client loss.
or
Client loss, like you lose a client, you gain a client, but it happens frequently. If a client passes, another one passes, you gotta get another one.
Uh-huh.
And that's frequent.
right.
That's what I guess you say. Human, natural death, whatever.
Okay.
But that's frequent.
So losing customers, we're saying, and workplace injury, we're saying. Okay.
I don't see that. No.
Employee
I
theft.
don't see that.
Okay.
Say employee turnover. Employee turnover.
Okay. Employee turnover. Yep. Victor.
Working in grocery retail business, a lot of times the perishable products, they'll go bad, but that's not that bad of it. That's not that much of an issue because you can either write that off as a tax write-off and you can give it to a food bank, or if it's a perishable product, it's in your decision and whatnot. So it's not going to be detrimental to your business.
Okay. So spoilage, right? Okay. So mainly this comes down to procedures. Do I have the right procedures in place in order to handle this risk? So those sorts of things like we were talking about there in terms of, losing customers. Hopefully there's procedures in place to be getting new customers all the time, right?
No marketing.
Yeah, exactly. And then, with workplace injury, I really should make sure that I have the right safety procedures in place. So that's why I would talk in terms of loss control. I'm making sure that I have the right procedures in place, that people are working in the right ways so that they're not getting injured, or that they're not stealing, right? Or that when we have food that goes bad, which we know is going to happen, that we have the right mechanisms in place to control the inventory. Now, the last one is high severity and high frequency. And so I wrote down here, avoid. Anybody have an example of the sort of risk which would be something we just want to avoid? I don't want to go anywhere near that.
Not doing a background check? Not doing a background check? On the employee?
Not doing a background
Right,
check?
like if you have a daycare or something?
Okay. So, So you're saying the risk is that we
Hire
hire somebody
Hire a
and we
pedophile.
should have done the background check in the beginning. Right, so that risk, so I would say that risk of hiring a high-risk individual for a highly sensitive job would be something which we really should handle through loss control. Like, we really should have the procedure in place to make sure that doesn't happen. Because that would be devastating to a business because of reputation and because of claims that could result.
You can avoid purchasing from companies that have a high rate in spoiled food and stuff like that, or keeping it, not selling it as fast as they should sell it or whatever. Because I mean, I'm pretty sure they got ratings for different vendors on if they get hit with a bad batch and how many times out of the year does this company get hit with this bad batch of food.
Right.
So you can avoid those companies.
Well, and so definitely. So if I'm talking about suppliers and the sorts of suppliers that I want to get in touch with and the sort of people that I want to do business with, then really there's going to be times where I need to avoid certain suppliers. But this is really about a risk to the business where the risk is so severe and the frequency is so, it's so likely that we just say, look, I'm not going into that line of business. And so the avoid really comes into play when we're talking about looking in terms of new business opportunities, right? So if I say, because if I've committed to a particular type of business, then I really need to make sure that I can handle those risks through loss control or transfer or be willing to accept. The avoidance is when I say, I'm not even going into that line of work. So for example, if I'm a general contractor and I say, all right, these are the types of contracts I can take on board, and then I start looking at and saying, well, actually, that sort of job, it's too risky. I just don't want to be involved with that,
That's also in healthcare too. You can have one certain type of, like, some people do child care, but they have a child that's severe in far as medical, like cerebral palsy, anything like that. Some people don't want to avoid the risk because anything can happen to that child.
Right.
That child is more of a risk than a normal newborn baby.
Right.
Compared to a cerebral palsy baby.
Right.
You got more risk that way than you do this way, so I avoid that one altogether. I don't want to have no medical issues with something like that. You want to stay neutral to one certain fact. So you can be in the same business, but avoid different situations.
Right, absolutely. So if I'm in the healthcare business and I say, these are the sort of patients I'm specializing in, just like if I'm in the, automotive repair business and say, these are the sort of clients I'm working on, but I'm not going to work on industrial trucks, then that's, that's absolutely, you say, I'm going to avoid that sort of risk to my business.
Not even advertising nothing for you to bring that type of business that way.
Yeah, you just decide.
It all together.
Right, you just make the decision. You know what? I'm not gonna get involved with that market or that opportunity. Any questions on that? Okay. So, what I always recommend for people, even when they're just starting a new business or thinking about what they'd like to do with their business, I always say, the best thing that you can do for risk management is just to start with a list of risks to your business. So if you have a business plan, somewhere in there really should be a list of the risks to the business because they'll crop up and I'll think of them at different times, or someone will mention something to me and I need to get that down on paper. So that's sort of step one, because if I don't identify them, then I have no hope of managing them well. So a written business plan, that will certainly help in terms of mitigating the strategic risks, so I can start thinking about my business in that sort of holistic way. There's also outside sources I think are really important, right? Because I'm not going to think of everything. There's no way that I can identify all the risks to my business. So I need to be talking with other people in the industry who have experience. You know, we never discount the importance of a mentor that can, you know, that can say, hey, you know, I can't tell you what to do, but boy, I'll tell you what not to do, because I've been there and done this and made this mistake. The other is risks related to vendors or suppliers. So I can talk with them about these sort of scenarios. We were talking about the contingency plan. You know, there are a lot of different discussions I can have with, well, what could go bad? What would you be concerned about if you were me? And on the technology side, you know, we see this addressed all the time, right? Through disaster recovery, through contingency planning. And then the other is business continuity. So within the business plan, you know, what we really want to see is, you know, are there risks identified, and do we have a plan in place? You know, if we needed to liquidate the business, is that in place? Has a trustee been identified? Those sorts of things. Okay, so some warning signs on risk. We have excessive debt. Reliance on a small number of customers can be a problem because we're not, we don't have the right level of spread in terms of revenue streams. Reliance on one product is another example, or relying on too few vendors are all problems, or at least they can be, and it's something we'd want to see, we'd want to identify and address. Also, cash flow problems. You know, those sort of, you know, any business owner I know, you know, pretty much they'll know if they're in a cash flow jam, they're going to know it. You know, other things are irregularities. So, you know, for example, when I was working in retail for a long time, if I saw all of a sudden somebody had a jump in terms of the hours on their timesheets, or the time cards didn't look right, I would know it. Or if somebody's expenses were out of line with the sort of work that they were doing, it would be apparent pretty quickly. But I have to take the time to look at them in order to see it. The other is high employee turnover rate. Some industries have more employee turnover than others. Seasonal businesses, notorious for a lot of employee turnover. But, you know, if there's an employee turnover rate which is a lot more than what that industry should normally have, or should usually be experienced, then that'll be another warning sign that there could be some risks to the business there. Okay, now aside from identification, the other is evaluation, right? So if I think about assessing the risks to the business, what I really need to do is I need to think about this sort of diagram here. So, you know, is this the sort of risk that I need to address through avoiding this line of business? Because I just say, you know what, I'm not going to get involved. Or is it the sort of risk that I need to talk to my insurance broker about? Or is it the sort of risk that I really need to look at, what do other people in the industry do? What are the sort of procedures that they put in place? And what are the sort of industry standards that we need to look to in order to make sure that we're mitigating the risk correctly? Okay. The other points here, you know, with key people within your business, it makes sense to discuss those risks and to talk about, if this were to happen, then this is how we respond. And so, you know, certain situations don't require a full, you know, scenario and running through, but you know, it's always a good time to it's always good to make sure that key managers are aware of the risks and that they're able to respond when something happens. Okay, one of the other tools for managing risk, which is more, I sort of consider it more of a strategic planning type of tool, is the SWOT analysis. And so a lot of times, just to kind of point out that weaknesses and threats, internal, external, are a lot of the sources of risks to the business. So if I'm sitting down with my business plan and thinking about, boy, I need to have that risk register or that list of risks then, if I've done a SWOT analysis, that will give me a head start there, because a lot of the risks to the business will come out of those two areas.
What's the areas was that again?
So weaknesses, so strengths and weaknesses are internal to the business. Opportunities and threats are external to the business. Okay, so here we just have listed some of the, some of the other types of sources where we could identify some of the risks. To me, the number one thing on identifying risk is talking with somebody in the industry. And if I have a mentor, that's always a great person to speak with about the sort of risks that they've seen in their business. And sometimes suppliers can be helpful in terms of talking about experiences that they've had. Risk insurance provider, talking with an insurance broker is always good too, because I know in my line of work, that's one of the things that we have to talk about with our clients immediately is, by the way, here are some risks that we already know are part of, your industry, and here are the sort of things that we should discuss. An audit firm or CPA, your accountant can give you some insight in terms of what that cash flow impact could be, or how to think about that in terms of managing risks and setting aside the right sort of money on reserve as a part of contingency. Okay, so some points here about risk measurement. So we need to think in terms of, and so I would say what I would really want to do in terms of measurement, in order to really understand the risk, is to really be thinking about this in terms of both dimensions. So am I really understanding how severe this risk could be to my business? And if I'm talking about this is catastrophic, I'm out of business out here, and this risk is no big deal, we'll handle it on that day, it's not a big deal. And where is it along that spectrum? Just like with the frequency, boy, this never happens. It's really unlikely this is going to happen, to, boy, chances are this is going to happen over and over again. So, so some of the ways in which I can think about the measurement of risk is through looking at cash flow, impact of the business in terms of future growth. So not how does it affect me in terms of severity right now, but what does that look like in terms of damage to my reputation? We were talking about public relations earlier. And so, what would the change in the business be if this risk were to happen? Like a change in the community, right? Is this going to be a whole pivot in terms of the direction of my business and the strategy of my business? And weighing costs versus benefits, that's always an important part of this. Because with a particular risk, we may look at it, and I know myself, I'll deal with different clients, and I'll work to help them, and they'll say, well, look, I understand how much this insurance is going to cost, but honestly, it's too expensive, because if this were to happen, I'll end up just, starting over with a new IT system. I'm not going to even worry about that. And then in those sort of situations, that cost benefit can just result with us saying, you know what, that's right. What you need to do is more look at your contingency plan and not buy a policy for that. Okay, so just a kind of few points here about understanding the severity piece. So how is it going to affect my cash flow? Is it going to destabilize my business? What's the impact in terms of my credit worthiness if this happens? Am I going to have to go to the bank and say, well, I'm going to be behind on my loan right now because of this? Longevity, right? So what are the long-term outlook for my business, and how does this risk impact that? Okay, so a few areas here just to kind of cover. Equipment and vendors, which we already talked about. We can include that within the contingency planning, within the business plan. If I'm writing out my list of risks, I need to be thinking about equipment breakdown or if a vendor goes out of business. I also need to make sure that service is another part of that, right? So if I'm looking at the risk, you know, there may be an approach which says, I need business interruption insurance, I need equipment breakdown, but I also need to look at the loss control side of this, because I also need to make sure that I have the right maintenance procedures in place. So that's an important point, just in terms of contingency planning and mitigating risk, that we can have an approach which takes on board a few different parts of this diagram. Okay. So, business continuity. Now we're talking really about the risk that we have to go out of business. I'm just wondering if anyone has done any sort of planning or thought about any sort of succession planning, any sort of contingency planning about having to close down the business.
Liquidate. Get rid of everything, collect all your money back, and, you know, either try to find something else to do or find another place to open up.
Okay, and so did you document that, or that's up
Well, I
here?
mean, it's all.
Okay.
It's already, you know what I'm saying? I mean, I've been doing business so long that, you know, you got many avenues of getting out of business and getting back into business. So it's just all about how you approach them. But I'm gonna put it all down on paper.
Okay,
So,
okay,
you know, everything in my head is gonna go down on paper. And,
okay. Yeah, I know myself, you know, with my own businesses that I've had at different points, you know, I would have ideas in the back of my mind of things that I was going to do. But once I actually sat down and said, you know what, I need to sit down and really think about this, you know, then my ideas will come down on paper, but I would also see gaps where there were certain things that I hadn't thought of. And so, you know, so that's really the benefit of looking at that continuity planning as a part of the business plan to say, if something were to happen to me personally, this is how that situation will be
and
handled.
also, that is a tool as well. A going out of business sign, like Haynes does it all the time. So, you know, I'm very, you know, I really observe my areas on how to become successful in business. And if you look at how they approach business, they'll tell you, oh, we're going out of business. You got 24 hours to come here and buy up all this stuff. And you go up in there and you pretty much spend your money because you're thinking this big entity is going out. And the whole time it's just like, look, we just wanted your money.
It's just
and
a sale.
Next month, guess what? You're going to forget about that going out of business, and then we're going to do it again. Like they said, the dump was going out a bunch of times. So there's many ways of, like I said, tricking the area because everything around you is a tool when you're in the business. If you don't use everything around you as a tool, then you will go out of business because you will forget.
So Justin, I just want to come back to the continuity planning now, because and I think that there are instances where people do that, right?
Yeah.
But in terms of an actual closing of a business, you know, when we think about training staff to continue operations, so this is, okay, well, I can't go into the business myself as an owner, so I need to make sure that I have a backup plan so that other people know how to do what I do. Yes, sir.
Yeah, my wife and I have had an herbal business for a while. And we've been in actually three locations. One location twice. And each time we had to move out, it became a home-run business. You know, everything was converted right back to the house. We used email and the website to direct delivery. So that was our contingency plan there.
Okay, and have you thought of that? I'm just curious. Did you think of that in advance?
Yeah, we did, but not to that extent. You
Right.
know, we had to sort of like learn on the fly.
Sure.
That's what I was.
Yeah.
Yeah, sure.
A lot of businesses aren't prepared financially,
and they don't anticipate on going out of business. A lot of people, they think that they're gonna perform, they're gonna do well, they've invested their money, so they're not preparing for that exit strategy.
Planning to fail is failing to plan.
Right, and I always say plan prevents problems. So if you pretty much know what you're doing, you have to play devil's advocate to yourself. And if you don't think you're doing a good job, I always get another set of eyes. I always run it past somebody else. Well, what do you think about this? You know, I might want to sell my business, but if my finances don't permit me to be in business until my business is sold, then I need to have a contingency plan on my contingency plan. You know what I'm saying? You have to have a couple of different exit strategies. You can't just say, okay, I want to sell my business. Okay, so what are you going to do if no one buys your business?
Right.
So I understand what you're saying. It's kind of like you said, it's kind of preventing yourself from failing.
Right.
If you're thinking ahead of what the norm, because most people aren't thinking that fashion.
Yeah.
I was going to say to that. I think that when it comes to business continuity, it comes along with management. Are you preparing those who are under you to continue? Because it may not, but the business will go out of business. I might want to retire. So am I preparing the person who's working with me to continue this business? And so am I working myself out of a job? I mean, that's the way I look at it, as working myself out of a job, preparing the next person. I don't plan on working for the rest of my life. And so it depends on if I want the business to continue or if I want to close it down. And so it just depends on, when you say continuity, I mean, what do you mean?
But a lot of people personalize it. So like you said, that's your business. So you're willing to teach people. Most people don't want to teach people to do what they're doing. They want them to stay in that position.
That's my own person. That's ignorant, because if you want your business to continue, then you want to work yourself. I mean, I think that's in any facet of life. If you are training people, you want to work yourself out of the job, because you want to train them to do what you do, and they can become better than you do. I'm not going to be intimidated because you're learning more than me, or or you're excelling than me. If you're going to benefit my business, then hey, I'm going to push you a little harder.
Yeah. So and so it comes down to the individual business and the goal of the owners or or the management in a larger company. So in a small business, there's many people I know who have a business for themselves, for their family. That's what they want. That was the whole point, was to provide a livelihood for myself and my family. And so in that case, what I would be thinking is, when I can no longer work, what happens?
Right.
When, if I were to pass away suddenly, what happens? So those are the sorts of things where, when I talk about business continuity, to answer your question, that's what I'm thinking about is, okay, well, do I have someone who could do this work if all of a sudden, I'm not around? I mean, is this just going to close? And if that's the case, then let's look at what the liquidation plan looks like. Let's see if we need to have a trustee to run that, or do I have another family member that would be able to handle that wind down and paying off creditors. So that's kind of, that's really what we're talking about in terms of continuity.
But isn't that just the difference between being self-employed and being an actual business owner? Self-employed, the business cannot function without you, whereas if you're an actual business owner, you work off of systems, so you don't have to be there for the business to function.
So I always talk about self-employed as someone who makes money for themselves and is not working for someone else. So self-employed, no matter whether that's, that's just that's the way I use the term. So now some people who are self-employed are owners of very big companies, but some people who are self-employed have a small business for themselves, maybe for a few family members. So the continuity planning really comes down to, as a business owner, what is it that I want to see happen with my business?
Okay, like I have 2 children. I told my son and my daughter, you need to go ahead on, go back to school, get your degree in social work or whatever you're going to do, because I'm laying the foundation. I don't want to have to turn this over to strangers when I know you have the capability of doing this. And so it's up to me to tell them, get yourself prepared, so that when I'm ready to walk out, you can come in and take over. And so business continuity, that's if you want your business to go on.
Right.
If you don't, then
yeah. So I would think of that as a succession
Okay.
issue, right? So that's about my long-term goal for this business is to grow it to a certain point, to bring my children in, to work in that business, to learn that business, so that I can work less and less over time. Like, that's what I want to happen.
But it's still continuity because the business is still going to continue. But and also even in the presence of even with staff people, if I get sick, I have somebody in place who I know who can run it while I'm sick.
Yeah. So just for the record, so I agree with you, right? That it is a part of continuity. So that succession is sort of the long-term continuity, right? So, but the sort of disaster stuff is what happens if I can't work anymore. All of a sudden, I'm not around. What happens?
That's why you have key people insurance. Did we learn that last week?
We did. Okay. So on the IT systems, just some points here worth noting down. You know, we need to make sure when we're thinking about people in utilizing IT systems that we make sure that the right people have access to the right information, that the right people have permissions to edit the right information, and that we're not extending undue permissions. In terms of competition, it's important to make sure that basically we understand who our competition is, what they're doing, and we understand the impacts in terms of the risk. Because we were talking about at the very beginning that the number one risk to my business is that I'm going to be out of business. My business is irrelevant. Okay. Moving on just to some accounting and cash issues, and we've talked about a lot of these things. So basically, in terms of cash control, there's separation of duties. So I want to make sure that, you know, for example, I might need 2 people to sign a check. Or when someone's getting the bills coming in, and the person who's handling the checkbook are 2 different people. Periodic audits or surprise audits, going in and talking with the bookkeeper or, you know, the controller and going through that information with them is important. Okay, employee management, there's a number of points here which are all relevant in relation to loss control, employment screening, job description so people understand what they need to do. You know, the point here about cross-training staff so that we have that backup in case somebody's no longer around. Evaluations and feedback, you know, good human resources practice.
I'd like to add to that, cross-train yourself too. In case somebody decides they want to get up and leave.
Yeah.
So the other points here on management, audit for payroll or time. I know expenses, same thing. You know, the incentives to avoid injuries and damages, those sorts of things, you know, if there's a formal safety procedure in place, then having incentives, you know, can help in that area, just to limit the claims that are involved with things like employee injury on the job. Okay, so in terms of just managing the business work, right, and looking at these sorts of risks here with setting work hours, planning work with a balance, setting realistic goals. These are the sort of things in terms of how do I design what it is that I want people to do and not putting too much pressure on them where, you know, it could increase a risk. Okay. Just in terms of risk control, there's some good points here in terms of communication and assessments. These are all tools which I would talk about in terms of loss control, right? Be alert to changes in the community and in terms of laws. Utilizing lines of credit only when they're needed, not for excessive things. Insuring against you know, those risks which require a transfer of risk. Okay. Leading by example, you know, so to me, this is the number one thing. I mean, above all else. you know, I mean, if I had a choice between being a leader with a strategy and ethics, I'd rather have ethics every day. I can work out a strategy, but my reputation's number one. So, you know, so this point here about being ethical and being honest with my business, you know, as in life, is paramount. We were already talking about exit strategy, so just making sure that we have that included in the business plan and revisiting that from time to time. Okay, so this is the end of the presentation, and the questionnaire is coming around the post-test there. Just before we wrap up, any other questions on this whole area of risk?
I have one question. With your 4 squares up there, when we first came in class, we talked about these are items of risk here. Quite frankly, I'm not sure how to put these into how this thing really works with an item, like let's say equipment loss or breakdown or market irrelevance.
Okay.
So where, I mean, how do you use this to take one of those items and measure or use it?
So let's say poor staff performance.
Right, okay.
We'll just use that as an example.
Very good.
Okay? So, okay, so just, let's say on a scale of 1 to 10.
On this scale here, so
Yeah,
that's
let's just say 1 to 10.
Okay.
Right? How frequently do we think that poor staff performance would occur? There's no procedures in place, we haven't done anything, we just started.
I'm gonna say high frequency.
High frequency.
High frequency,
Okay. Right? So, we would put it here,
Right, that's good enough, yeah.
okay? How about severity? If I have an employee that's performing poorly, is that going to?
In my business, it's gonna be bad.
Okay.
Right.
Right, so it's gonna be, how bad, an 8?
Yeah, 8.
Okay.
Right.
All right.
So I'm gonna avoid that.
So let's put it there. So
I see
I'm
what
up
you're
here.
saying. Okay, yeah,
Right?
right. Okay, I got you.
Now, if we took a different type of business,
Right.
so, you know, Victor works in the grocery store business, right? And so, in that sort of business, if I had to talk about severity of poor employee performance, I have a staff of hundreds of people. Where would I put that?
Down here at the bottom,
Right.
2, yeah.
Right.
Right.
So that would be there. So that's a sort of loss control issue. So I want to make sure my human resources people are on top of that. And for what you're describing in your business, Ulysses, I would say it's not worth hiring somebody
Right.
unless we were really clear about who that is. Do you know what I mean?
Okay, right. I explained it.
So that's how I would
That's how you-
do that. Any other questions? All right.
Okay, very good, thank you so much. Now, what I have just distributed would be your evaluation. You can take the post-test. We always like to do the pre and then do the post, and that's basically for your convenience to find out how much you knew and then how much you learned from that. The other thing is that I do have the May calendar for the rest of the classes that we're going to be offering in May. So if you want one of those, you can come up here and get that. Mr. Harris, I think, has an announcement that he wants to make, so I'll turn it over to Mr. Harris for that.
Thanks, Pat. I talked to Pat early part of the week about maybe trying to get everybody together for a networking session to see whether or not we can network together. Hopefully we can do that maybe next session. I know this is relatively quickly, but if you can just allow maybe 15, 20 minutes after the session of next week, we can talk about it, maybe get a round table together and see how we can network together. Any questions, concerns? For next week, if you can allow maybe 20 minutes or so, okay? Great. Thanks, Pat.
Okay, thank you, very good. Yeah, anytime you have an opportunity to network, that's what you need to do, because it's amazing how much value you can get just from talking to each other. Very good. We also, I don't want you to forget that we will be doing a graduation, and again, those will consist of everybody that would attend all the classes. So try to attend all the classes so that you can be part of the graduation. All right, any other questions? All right, make sure I get your evaluations. Thank you. Oh, and if you didn't sign in, make sure you sign the sheet. That's how you get credit for being here.
I have his card right here. Yes,